Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
The time is 2 p.m. Thank you for tuning in this afternoon. This is Nedbank Business Watch right here on Eswatini TV. My name is Notilesi Tole.
And I'm Sifiso Ngumalo, happy to co-host this program this afternoon. Thank you so much for tuning in. On the program today, the Ministry of Housing and Urban Development is reviewing a decades-old law. It is a law that affects every homeowner as well as ratepayer. Now, the Rating Act of 1995 is under the microscope, and government says it is time for change. What does that mean for your pocket, and how will it shape the future of the capital city? We'll ask the tough questions to the Ministry of Housing's Community Liaison Officer, Melusi Hlanze, who's already in our premises. He's going to be right here in studio with us. Plus, the central bank is projecting record growth for Eswatini's economy this year, hitting nearly 8%, fueled by big-ticket infrastructure projects. But the boom is not going to last forever. Growth is expected to cool, and inflation is set to rise by 2027. What is driving the slowdown, and what will it mean for ordinary citizens? We've got the breakdown with Saneless Bia, our economist. You know him by now.
Also on the program, Eswatini's premier business and innovation platform just got greener. Nedbank, committed to driving sustainable growth and empowering entrepreneurs, has come on board as a key partner at this year's trade fair through the Green Zone. This partnership reaffirms Nedbank's dedication to supporting individuals, SMEs and corporates while playing an active role in Eswatini's economic progress. Joining us later on the program as we discuss a partnership that seeks to build a stronger, greener and more prosperous Eswatini. For now, we'll have a look at our business news.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
We're 3 minutes into the program. Per usual, we'll start with our business news.
To kick things off, Sigwe is set for significant economic development as South African investor Amandla Omnoto enters the local market, set to create 120 new jobs upon completion. The Honourable Minister of Commerce, Industry and Trade, Manqoba Khumalo, met with investors to deliberate on the way forward for the project, also answering questions on remuneration issues, which are often a key topic of discussion when investors engage in Eswatini.
The Minister for Commerce, Industry and Trade has expressed the government's enthusiasm for the project, highlighting its potential to actively engage young people, particularly the youth of Sigwe, who will also have the opportunity to become shareholders. The minister emphasizes that a thorough vetting process was conducted prior to the company's entry into the country, ensuring the welfare of eMaswati. He further stated that the company will offer competitive salaries in accordance with the government regulations as outlined in the government gazette, with ongoing improvements anticipated.
Lokusijabulisa ukuthi bathi de bafuna kusebenza nebamfla basha baseSigwe abafuni nje ukuthi kuphela babe ngema employees but bafuna ukuthi nabo kube khona inhlangano labayi formisha batoba ngema-shareholders bayeke laba sebenda kubaka IPA kanye nalaba baka amandla omnotho the investor babukeke le government gazette ukuthi umsebenzi lo njengalona ungakwemthetho uhola malini lo njengalona uhola malini bese ke ba improve kuloko sisengekho ke esigabeni ukuthi sekwendekile lokho ngoba kusese early but I think mase kufika isikhathi sakhona kuyawube sekuyasebenzeka ngekwemthetho lesikwadiko njengale nkampani siyendile i-due diligence yethu ngamandla omnotho.
The investors have confirmed that the first phase of the project will create 30 permanent employment opportunities, which are expected to increase to 120 upon completion.
Le FETMIS yakhiwe yaba fully operational. We're looking at about 120 people that will be employed. So oda masaqala ke so siqala kancane mhlambe from 30 people still as a production nabantu be understand ukuthi yini edingakalayo kuma skills zabo so bese siyapusha ke.
Icathulo nje 5000 every month. Yeah, zizokhiqizo so uyabona ukuthi already umkhiqizo uzoba khona lapha yana effect uzoba mkhulu kangakanani and njoba esho uminister ingxenye yale effect uzobe onwa abantu baseSwatini ngoba sifuna ukuthi umnotho kungabe ukuthi onwa abantu bangaphandle kodwa onwa abantu baseSwatini eMaswati themselves.
We always bring from China, Taiwan, different countries, but this time Eswatini they have their own brand. So this is our very much excited and we are proud.
Sigwe Member of Parliament David Ngampalala announced that Chief Kasawangwane will formally hand over the project site. He noted the rising youth unemployment at Sigwe and expressed hope that the number of employees will surpass the initial target of 120.
Sesibheke ukuthi niyobona indawo umntwana enkosi alinike kahle officially uqale umsebenzi wefika letheleni ngale babona inhle kakhulu indawo ke leya nayo indawo yeSigwe kulamalanga ngempela iyathuthuka kakhulu ngeke ndisole insha kakhulunywa ngayo ukuthi mangabeka nje nani niyawubona ngaleli langa le nombolo ufuna sitengete ngoba emathuba emsebenzi ivela kasabona.
Although the timeline for the commencement of construction and the total investment amount have yet to be disclosed, the investors stated that approximately 5,000 pairs of shoes will be produced monthly. Reporting, Nelson Langamandla, Vuminkosi Mbabane.
With only a few days remaining until the Eswatini International Trade Fair, the Minister for Commerce, Industry and Trade, Honorable Manqoba Khumalo, says the focus this year is on artificial intelligence, which is seen as having great potential to boost economic activity. We have a report.
We are truly excited that this year we are again hosting the Eswatini International Trade Fair that is hosted by Eswatini Investment Promotion Authority. I'm very, very excited that Eswatini Investment Promotion Authority, IPA, has done a fantastic job to prepare for this year's event. It starts on the 29th of August 2025 and ends on the 8th of September of this year. We are extremely excited that this year's International Trade Fair is bigger and better than last year. The number of exhibitors, the quality of the exhibitions, the diversity of the exhibitors is truly, exciting. We are oversubscribed as we speak, and there's no more available stands and stalls because the demand is so high. The theme is digitization. We are going to be having a very strong digitization theme, and government itself will also be showcasing the government in your hand tool that aims at digitizing all government services. We'll be having various workshops and various networking sessions where business people will be showcasing what they do, but also interacting with other business people from which they can learn new tricks of the trade. We are extremely grateful that on the 6th of September, our Independence Day, His Majesty, their Majesties will actually visit the trade fair and visit every stall to see the work that our MSMEs and big business people are doing.
All right, it's 10 minutes after 2. You're still watching Nedbank Business Watch.
Stay tuned because after the break, Sifiso is in conversation with Community Liaison Officer from the Ministry of Housing and Urban Development, Melusi Hlanze.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back and thank you for staying with us. The Ministry of Housing and Urban Development is currently conducting nationwide consultations that are aimed at reviewing and updating the Rating Act of 1995. As part of this important process, Melusi Hlanze from the Ministry will provide insights into the key areas under consideration, as well as explain to us what changes need to be made to modernize the Act, as well as to ensure that it meets current urban development needs. Mr. Hlanze, thank you so much for joining us on the program. Good afternoon to you.
Yeah, afternoon, Mr. Ngumada.
Mr. Hlanze, it's quite an interesting development. You know, I'm trying to bring it home, and I start by making it intimate.
Yes.
This act is literally my age. And I'm thinking it passed when I was born, and it's only getting a few changes now. Let's start with the basics. Let's help the viewer just to understand and appreciate what it is that we're talking about when we say Rating Act of 1995 and why it has become necessary to review it 30 years later.
Thank you so much, Mr. Ngumado. What I'd like to first point out, this is not the first review that has been done on the Act. The Act it was enacted around 1898, which was mostly the hard tax. So it was looking throughout the whole country, where even our Bokuka standards were being rated. But with the difficulties of getting people to pay the taxes, it was scaled down into the Rating Act of 1967.
Okay.
So it was reenacted in 1967. Then it started to focus only within the urban space. So part of the Act did not allow for the rating of government properties, the 1967 Act. So it was then reviewed in 1995 so that it can include government into the tax bracket. So that is basically the Act. So now, as we have seen that when there are things that has to be done, we also go back to Parliament to ask Parliament to review it. Even now, there are necessities of reviewing the Act. You recall that the Act was, as it is, was enacted before the coming into effect of the 2005 Constitution. So most of the provisions in the Act, or some of the provisions in the Act, are found to be offending the Constitution. Particularly, Section 32 of the Act, which which was giving powers to the clerk of court to make a ruling on the person who were owing rates. But now, because the Constitution provides that only the judicial officers have got a right or power to make rulings, so we have to come back and make those necessary reviews. Again, you recall in the recent past, the Ministry of Housing has introduced the sectional title, which is one act which is trying to empower Swazis with less income to access housing. So that act again provided or brought in some new provisions that you can jointly own one structure within one landed area. So now we have to look at how are we going to rate those particular structures. There are quite a number of other things, considerations, which are coming now from the public out there.
Yeah.
That yes, we've got the Rating Act, but now we've got challenges because now we've got homes in the towns. But the Act appears to consider rated or properties in towns as assets other than homes. So we need to also look at that. How can we best fit within that particular scenarios?
It's quite interesting indeed. Some of the relevance, the relevance that has sort of compelled the changes that you are accounting right now, and indeed it has come with timing, because we often hear that laws should evolve with times. And I know I'm listening to you speaking about it being enacted in the 80s, a review being made in the 60s, another one around 2005, if I remember correctly. So it does show that there is a bit of urgency there, but perhaps not at the cadence that it should have been, because when 2005 to 2025 now, that's a significant period. But perhaps let's look at public participation, because I'm happy that you are saying there's some concerns that are being raised by the public and you want to heed to those. Yeah, engaging residents. The poster says you're also engaging ratepayers directly in this process, beyond attendance. What kind of real influence will ordinary citizens have on the eventual outcome of this review?
With times, people have evolved themselves. Previously, you'll find that we are enacting legislation on behalf of the people because maybe they were not that much exposed into the creation of legislations, into the complex government activities. But now we've got many people who have got much more greater skills even than the people who are in government. So that's why we're going out to everyone who will assist in directing the review of the Act. Even previous acts were more of a control environment. They were enacted to control people, but now we're trying to have legislations which are more facilitating. So we are aware that out there, people now have got all the capacity and the skills to provide the necessary skills to drive our processes forward. So that is why we have to consult them. Again, the Act is looking at two things. It's looking both at how we can make our areas or local authorities sustainable. At the same time, it must protect the people, it must protect the property owners in a certain way. So now we have to find out from all the angles of the society how we can bring that balance.
We are being advised to wrap up our conversation, but I do want to ask this as a parting question. There's a few things in life that sort of bring skepticism to a lot of people. Obviously, there's death, there's the word taxes, there's also the word rates. There's something about that word that comes with a lot of skepticism with it. How do you ensure that this review does not only become a technical adjustment to increase revenue, but rather a balanced process that protects residents while sustaining municipal services?
Yes, rating has always been a scary thing.
Right.
We've consulted people before, some chiefs, traditional people, who accepted that they do have what they call the Kwamatenvutfugo, which is community funds. So when we brought to them that even the rates are just a community fund, it's only that they've got a certain legislation to guide it. So now people who are trying to come from that side, that we are in the best interest of their properties, try to develop something that will sustain the local authority. If it is sustainable, then their properties will also grow.
Mr. Hlanze, thank you so much for your time. We really appreciate what the ministry is doing with this act, and I'm sure even the residents and the ratepayers really appreciate that they are really being included intentionally. Thank you so much. Mr. Hlanze, Community Liaison Officer from the Ministry of Housing and Urban Development. We speak to Zamangwane Dlamini from Nedbank after the break about Nedbank's participation at this year's trade fair. It commences on Friday. After the break.
Welcome back. You are still watching Nedbank Business Watch. In our chat with Nedbank today, we're talking green. This is after the launch of the Nedbank Green Zone to be at the upcoming International Trade Fair. At the Green Zone, visitors and exhibitors can expect an immersive experience highlighting sustainability, eco-living, green finance, and smart financial solutions. Zamangwane Dlamini, Head of Branch Networks and Personal Banking, joins me now in studio to expand on this partnership with APA. A very good afternoon to you, Zamangwane, and thank you so much for joining us in studio today. Nedbank has come on board as a key partner at the Eswatini International Trade Fair. What inspired the bank to take up this role?
Afternoon, Notile. Thank you for having us back here again. So this year, as Nedbank, we did want to align to the fact that we are financial experts who want to do good. We are financial experts who want to ensure that we provide financial expertise. And as a result, we recognize that the trade fair is one of the biggest platforms that showcases innovation in the country. It's an opportunity for us to network, and it's also a platform for business growth. So this partnership is an opportunity for us that allows us to demonstrate ourselves and the commitment in supporting the entrepreneurs of the country, as well as personal banking clients or consumers and corporates who actually drive the economic growth of the country. And so we'll be showcasing some sustainable finance solutions at the trade fair. So it was an apt opportunity for us to certainly partner in there and position ourselves as green finance experts.
Over 300 exhibitors expected, with about 70,000 visitors expected as well. You know, it's quite the platform for innovation, the platform for business growth. Your partnership as a bank with APA, or the Eswatini International Trade Fair, how does it fit into, the bank's broader strategy and commitment to supporting businesses and sustainability in Eswatini, businesses of all kinds, that is?
As you've mentioned, it fits very well. It fits perfectly into the bank's strategy at present. We are speaking of sustainability. We are speaking on digital innovation and financial inclusion, which are key anchors of the bank strategy. So being part of the trade fair allows us to align with the national or the country's developmental aspirations and goals in that sense, whilst we provide the expertise in terms of engaging with small business owners, consumers, large corporates to help them in their sustenance of their businesses in the green economy. And hence why we call it financial inclusionary positioning, because we do want to assist exhibitors, customers, and anyone who is at the trade fair to get some advisory services and expertise from us, and also to be capacitated to use the digital and innovative tools available to them in managing their living, healthy living or green living, or in managing their small businesses as well for a long-term sustainability in that sense. So it's a bit of responsible growth whilst we walk with them in this journey.
Right, responsible growth while you walk with these businesses and entrepreneurs. This sponsorship, what does it mean for your customers, both individuals at a personal level and businesses, who often approach or seek to Nedbank for finance solutions?
Yes, as I've mentioned, Notsile, we just want to reaffirm. We want to reaffirm our customers that we walk with them in the different journeys that they take. Whether it's an SME who's looking for working capital, starting out in a small business, whether it's the individuals who are looking for personal household individual solutions or banking solutions, or it's the corporates who are driving big-scale projects and investments in the country. We're just there to provide the right financial products and solutioning for them that meet their needs at that point in time.
As a bank, what value do you think a partnership, at the trade fair, being part of the fair, what value does it bring to both the bank and the economy at large?
So, as I've mentioned, the trade fair is quite the platform in terms of the opportunities that can be derived there. But first of all, we want to really reposition ourselves in terms of the value that we can bring as a bank, to say that it allows Nedbank to be part of the conversations and moving into a green economy and sustainable development. We talk about the SDG goals. We're certainly aligning ourselves with those SDG goals from a country or global and then country perspective and then a bank perspective. So it allows us to build stronger relationships with our customers, to reassure them that we are still here as a bank to support their financial needs in those types of solutions. But also the trade fair this year has been pegged as Digital 2.0. So we do want to ensure that we are interacting with our customers to drive the digital enablement, the comfort in being conversant with digital capabilities within your business to increase your efficiencies, to reduce your costs, to find alternative sources of power, as an example, in your businesses, even in your household. How can you be eco-conscious of your environment and start to protect the economy and the environment that we are operating in for future generations to come?
The conversation on greening and sustainability is louder now more than ever. How is Nedbank adding to the overall experience of this year's trade fair for exhibitors, for visitors, and the community as well?
So we've created a Nedbank Green Zone, as you've mentioned. It's a central hub that allows for, you mentioned in the beginning, an immersion and an infusion of all the aspects of sustainability in the spectrum. From a green finance perspective, eco-living, exhibitors and visitors will find us hosting interactive green talks where we will be inviting subject matter experts, service providers, suppliers, vendor, whichever business you are in, whether it's recycling, upcycling, reusable items, craft items. So we want to bring clients into our space where we'll be showcasing and having these interactive conversations whilst we embed with the financial solutions and walking the journey, having a conversation with a Notsile who would want to have a geyser or lights solar powered in their house or home. How does that work? Whether you're in a rental apartment, how would that work? Or you own a home, or you'd want to maximize on other items in terms of plants, farming. We are, eating healthier nowadays. What kind of fertilizers can you do to start your own little small garden, all the way to mid-scale farmer irrigations and options like that. So we are wanting to really just say, come visit the Nedbank Green Zone, which encompasses smarter living as well as sustainable business practices in that sense. So it's not really just, it's more than visiting us, but we want to empower our clients to make better decisions.
Beyond this year's installment of the Eswatini International Trade Fair, which will actually be the 57th edition, how does Nedbank envision continuing its relationship with the trade fair, and supporting Eswatini's business growth and economic growth story?
For us, the launch of the Nedbank Green Zone this year is only just the beginning. Of course, we do intend to remain a very prominent participant in this economy, as well as the trade fair, in terms of the duration and the period in which this happens, because we recognize that the trade fair is such a big platform. It is a big platform, it's a national platform, and so it allows us to really engage, to empower the communities that we serve. From a bank perspective. And of course, we do want to remain active, as I've mentioned, but we also want to build the consumer and business as well as corporate resilience in their operations and in their day-to-day living, in terms of how far we can go and how they can be included in this green economy.
Zama, what message would you like to share with the people of Eswatini? Not only the people of Eswatini. I understand that some of the visitors for the trade fair, be coming from outside of borders. What message do you have for them as they prepare to, participate or be part of the Eswatini International Trade Fair?
A message that we would want to share is very simple. Just come and experience the Nedbank Green Zone at the trade fair. Visit us. Do engage with us, participate in the seminar, participate in our green talks. We'll be having the green talks, as I've mentioned, on our stand, and allow the bank to be part of the journey. So integrating the financial solutions aspect as well as your aspirations, whether you're an ordinary customer, citizen, or a visitor and or business, and whatever aspirations you have. So for us, it's wanting to just encourage visitors to come through, and also then us walk the journey with them in building their personal growth, business expansion opportunities. And we do believe that together from there we can certainly play a bigger role and make a better impact in growing Swaziland into a more prosperous and greener country and economy. Yeah.
Right. While you're encouraging Eswatini to come through, be part of the Green Zone, I can imagine it's a week-long event, a week-long fair, and I want to believe there's going to be green talks on sustainability and different experts when it comes to the different subject matters within climate action. Are these going to be every day? What does the week look like when it comes to the Green Zone? And for the people that will want to pay you a visit, will they have to register in any platform?
Thank you for asking that, Notile. So our green talks are going to be every second day on the Nedbank Green Zone stand, beginning from the 1st of September. So we will have subject matter experts that are interacting with consumers who would have an interest in the service that they provide. I made an earlier example to say that, let's say, for example, you're in the business of growing seedlings. You may have a talk to showcase your product, how your operation actually works, where other people can take some inspiration and they can also support and buy from your business. It's in the same and similar fashion that you could have someone who's in the business of fertilizers. I'm using quite opposite and extreme cases as examples, but they would also be able to speak to people who are in the agriculture sector to say these are the types of inputs that are more sustainable, that are more climate-friendly, plant-friendly, and cost-effective, and they will give you a better yield or an outcome in your aspirations if you're in a mid to commercial scale farming. For your ordinary consumers, we can have people who are doing crafts for decorations in your households, and you could have people who assist with, say, you know, we can offer boreholes and lighting. And also we've partnered with a vehicle service provider who will also be showcasing their hybrid model cars, all aligned to the theme of sustainable living and the green economy. So we want to just encourage that change in a mindset shift and also aligning to more eco-friendly living and consciousness, like we've mentioned before, to say, you know, when you do see that car, at least think of the fact that actually this is a car that is not invasive into the environment. Yes.
Right, Ngozi, thank you very much. That was Zama Ngwane Lamini, head of branch networks and personal banking at Nedbank. You know, we're just talking about the bank's partnership with APA for the upcoming Eswatini International Trade Fair, where they will be having a green zone. So be sure to check them out. This is Nedbank Business Watch. Stay tuned.
Welcome back, and thank you for staying with us now. The Central Bank of Eswatini has released the annual integrated report for 2024-2025, and it states that the gross domestic product is expected to average 5.4% between 2025 and 2027. It is driven by massive public and private sector investments. Now, the economy will peak this year at a robust 7.9%, fueled by large-scale projects in dam construction as well as energy infrastructure. It also states that growth is then, growth focused is then expected to moderate to 5% in 2026 and 3.3% in 2027 as project momentum stabilizes. Let's ask important question now to our economist, Sanele Sbia, who's going to help us make sense of all these figures. Sanele, good afternoon. Thank you for always making time. On the peak in 2025, we're looking at an extraordinary 7.9% growth forecast for 2025. It's quite interesting. But they say that it is largely driven by mega projects in energy as well as dam construction. How sustainable is this growth that is so heavily tied to infrastructure projects?
Thank you, Mr. Nxumalo. So what you are rightly pointing is an issue of the sustainability of those investments, because what we are looking into is an investment or a growth story that is largely influenced by these capital projects that we are seeing happening this year and probably going to trickle into next year. What then comes to mind is an issue of how do you then sustain this government expenditure going forward to ensure that you keep the growth at that 7% type of region, because it's the type of growth we need to continually grow the economy. So right now, the reason you then start seeing the numbers, you know, bottoming out towards 2026, 2027, back to that 3.9 region, is because you're not seeing any additional source of an injection into the economy coming through from the government. But the numbers may be revised upwards if we were to, for example, deliver the jobs that were created and then that were promised in this budget, and then we start seeing that growth through the services and the manufacturing sector. That one is when we talk of sustainability, those are the sectors you need to grow. You need to grow your manufacturing base, you need to grow your services base, and you need to have people absorbed into those sectors and have those sectors creating jobs going forward so that you sustain that momentum. Otherwise, what we are looking into is just a very short version of the China story. One of the reasons China is now struggling to grow is because they have been growing through infrastructure investments, and at some point you are going to run out of things to do, and you want to then need to find other ways of injecting a government stimulus into the market. And it also becomes an issue of whether we are going to have that stimulus or the ability to provide that stimulus. And part of the projections, when you look at it, it speaks to the effect that most of these projects that we are seeing are largely going to be funded through this very high absorption of loans, of public loans, and then you ask yourself if next year we're going to have scope for that. So that's one of the factors that are contributing to the numbers, and you're seeing the numbers, just bottoming out because we seem to have reached that threshold, and we're not sure until and unless we see the numbers. Probably next year we will have scope to borrow and do more of the work. But what we need to do is find a proper balance as a country to make sure that we are able to sustain it within our own coffers and within our tax revenue. So the tax story is another story that we need to look into in terms of how we grow our tax revenues as a country.
I mean, on the surface, and you rightly put it, the sustainability is going to be important because on the surface level, it is quite interesting how we can be easily excited about the 7.9 growth focus, which is, quite extraordinary. But you say what is going to be imperative is that we have a manufacturing base that is able to, create those sort of manufacturing spots that will then have jobs that are sustainable. Can we make examples of, such a manufacturing base? Because as it is, it's quite general when they say mega projects in energy and infrastructure.
Yeah. So what we are seeing right now is government focusing mostly on infrastructure projects, building the roads, though making sure that the country has access to energy. If we are looking at what's happening around the green space, we are looking towards moving into being a green energy country, so it's those things where what government is doing at the present moment is putting in place the catalysts that are going to be required for private sector to come in and lead the charge. So what we need to then ask right now is, are we doing enough to get private sector to come in and lead the charge? Are we doing enough to become an ideal manufacturing hub for the region so that we become also a distributor? So those are the other issues that we need to then also delve into and ensure that we grow that base as well, over and above the infrastructure and all of those things. And I've said at some point that as a country we need to sit down and take stock and see if indeed investing this much money into the roads really is translating into the commerce, because that's the case that you make. I'm sure if you can take I've forgotten the technical name for this document that the World Bank would then use, that country document, whatever loan has a document that goes with it. The business case that we make is we want to unlock commerce.
Right. The
question we need to ask is, have we unlocked commerce enough so that our people are able to get jobs and we're able to attract, that foreign skills, to come into the country and become that productive hub. So at some point we need to sit down and take stock of that as a country to see if what we are doing indeed is working, if another factory house is worth it or not. We are not saying it's not worth it, but it is quite a critical component of our investor package. But we do need to sit down as a country and, take stock and analyze those issues. So that's what we need to get into, where we are getting people to come into the labor force and work and get taxed. We get people to come and open businesses and get taxed, so that we continuously grow the economy through your manufacturing, your services, and the tax base.
It's interesting because, you know, you're highlighting something that is critical here, and that is the risks that could come with anchoring sort of our economy on large-scale developments, such as, you know, infrastructure and the energy sector, as it were. And when we go to the medium term, we are going to see something interesting here. The GDP is averaging 5.4% between 2025 to 2027. Yet we see a steep slowdown from this extraordinary 7.9% that we were looking at to 3.3% in 2027. That is quite the significant deceleration, and I wonder what we attribute that to.
You know, the issue of looking at averages, Mr. Nxumalo, is it tends to mask the underlying issues. For example, when you average the 3 years out, you will come up to 5.5. But when you now go into the nitty-gritties and you go to 2026, 2027, you will see that we are now coming back to that 5% and we're going back to that 3%. So that's purely because, number one, what you're looking into with SACCO receipts, this year SACCO receipts are already low, so that now somehow limits the scope for government to continue, you know, expanding such billions into CapEx so that you drive the economy that way.
Okay.
You look into the scope of public borrowing, we're not sure if they're going to be okay with spend, you know, having commitments that are above the 40% of GDP. So now all those are the issues that you have to then factor into consideration in terms of whether government will be able to sustain that going forward.
Yeah.
You know, already we know that we are very close, if not above that 40%. And I think projections by the ministry put us at 4.43% this year.
Yeah.
So that means next year, ideally, we do not see the scope for more mega projects, which is what is going to be driving the economy.
And I suppose that was the big question there, to understand whether it's the deceleration is attributed to a tapering off of the construction boom, as it were, or something deeper. And I suppose it's both, because you mentioned deeper issues as well, like the SACCO receipt story, but also the tapering off of the construction boom, I suppose, plays a huge role there. As we get into inflation, I suppose, to curtain our conversation, 2027, we're seeing that inflation is projected to reach 3.92%. At first glance, that looks relatively contained. But in practical terms, what pressures will this place on households, particularly when wage growth has historically lagged behind inflation?
So I think right now, Mr. Nxumalo, what we are going to see is, you know, in terms of the household sector, especially the ones that are in gainful employment, we are going to see a bit of indexing this year. We have this cost of living review. So what you do, we usually say inflation is indexed because we build it into your wage. So right now, what we're hoping with the review is wages are actually going to catch up to inflation, which is what it's supposed to be doing at the end of the day. And we've seen quite a double-digit increment being proposed by the consultant. I mean, the news that we've seen, so we don't know how that is going to go. So going forward, you might find that households are going to be a bit okay, and without any significant supply side shock, as we've seen through the COVID pandemic, the Russia-Ukraine conflict, without any such issues coming back into the fray, well, you know, the pressure on households may not be that dire as you would expect. But what we would then have to caution is the fact that even with the wage growth, you might find that the inflation then also accelerates, because when you get more money pumped into the economy, people are going to spend more. So that's one of the things that we need to be worried about, and looking into how the Tula season is going to affect the inflation number there. And then going forward, we should expect that to have indexed, and then households are not going to have much strain coming through. And, you know, the projections in my head, they are well within the feasible region where we would expect it to be, because we would be worried if we're projecting anything above, you know, the midpoint, which is 4.5%, or anything above 6%. But 3.9%, that's good. And I think the highest is around 4.9% if you look at the projections there in the next 3 years. But what would be a bit worrying right now is how are we going to transition from this deceleration, from this disinflation spiral that we are seeing right now to this new inflation that we will be seeing later on. Right now, inflation sits at around 2.8%, and we are a bit worried what happens when harvesting season is over. Are we not going to see yet another accelerated inflation cycle where tomatoes go back to the 30 rands they were at, and that is going to become a transient shock to households? So that now brings us to having to think around how we ensure that our supply, more especially of food, which is one of the major contributors to headline inflation, is somehow stabilized across and throughout the year.
Mr. Spear, thank you so much for your time. One thing about economics, it's going to project, but it is also going to give us what we should heed to with these projections in terms of the implications that come with these developments. One thing is for sure is that we must look into manufacturing to sort of welcome sustenance in all of this development. Let's go for a net break. We have the Treasury team from Nedbank Eswatini with our market analysis.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back to the program now for our market analysis segment. Toba Kamete joins me now from Nedbank. A very good afternoon to you, Toba. Thank you so much for coming to our studios. I'd like to start here. A heated court battle between U.S. President Donald Trump and Fed Governor Lisa Cook. Amid the turmoil and threats of independence of the Fed, are stocks and bonds reacting to this? Any heightened volatility?
Thank you, Natsila. Good afternoon to you. So yes, definitely. There is jitters in the market in the wake of what happened yesterday, where President Trump fired Governor Cook. But what is more on market participants is on the outcome of the court case, because we have heard from lawyers of Governor Cook that they will be taking this into the justice system to sort of get an outcome there. So markets are sort of waiting to see what the courts are going to say, because that will influence the independence of the central bank or the Fed from the presidency. So right now, yes, that has caused a bit of friction in the market. It has, influenced volatility, but the full extent of it is going to come out of the outcome of the court case, because that will determine the influence that the White House has on the Fed.
Okay. The U.S. slapped India with 50% U.S. tariffs that are set to take effect today, affecting at least 55% of exports, India's exports to the U.S. And India's Prime Minister Narendra Modi is actually just encouraging self-reliance. What's the impact of this move? How exactly in Asia, how are markets playing out right now?
Yeah, so so the tariff came into effect today, Wednesday. There is quite a lot of volatility that is bringing, and also just pressure on India as well as an upcoming economy. They can't really choose between the US and Russia at this point, based on the reliance that they have built on procuring oil from Russia, because that is where it started, or that is where these tariffs you can say are coming from, that India is importing Russia oil products, growing up to about 41% from 2% that they were getting pre the war. Okay. So the US has then retaliated against that. But yeah, it's we're yet to see. It is going to affect Indian exports. But the US has been strategic to sort of not include the ones that they are interested in. Right. But yeah.
So much global uncertainty here, but let's get into the numbers. Our equities this afternoon, what's driving equities? What's happening on the markets today?
All right, so it's when we look at our equities, the S&P 500 is up 0.41%. In that index, the market is looking towards NVIDIA's earnings that are going to be reported later today, to sort of get an idea of how AI stocks are going to trade post those earnings. The market is pricing in a 260-odd billion movement in the value of NVIDIA from that earnings that are going to be reported. The FTSE is also trading marginally flat, 0.05%. At 9.2 pounds, and the JSE all shares slightly down at 0.53%.
Right. The JSE, what's with the decline there?
So it could be more of on the rand weakness that we are also seeing, because if the dollar is a bit stronger, some of the exports that are coming out of, some of the imports that are coming into South Africa are then becoming more expensive. Right. So it's more along those lines.
Okay, let's get into our commodities. What's shaping gold and other commodities this afternoon?
All right, so gold is down from the levels that we saw yesterday, but I would say it's more of a price correction with gold after the firing of Governor Cook yesterday. We saw the dollar dropping, so that then meant buyers were sort of flocking into gold, but we are seeing that subsiding today. But none other than that. It's still trading at high levels, but we are going to see more movement when we get outcome of the court case against this, which is then likely going to move the needle on that. Oil is down as well significantly. Two things that I would point out. It is the US-India sanctions that are weighing on the market, as well as just uncertainty in the war, geopolitical tensions.
In a minute, can you give us what's shaping currencies this afternoon. How is the rand or the langini playing out against some of the world's strongest currencies?
Yeah. So in the absence of economic data in South Africa today, the rand is more influenced by global sentiments. We can see that it's significantly down against major currencies. Today it's red, 17.7 against the USD. So it's more on just the price correction, the dollar gaining more strength, and just more positive market influence on the US side.
Right. Chova, thank you very much for your insights. That was Treasury Sales Manager at Nedbank, Toba Kamete, bringing us now to the end of today's edition of Nedbank Business Watch. Until next time, thank you so much for tuning in. Take care.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.